Hi, my name is Shaumya Sarkar and I am from Wealth Redefine. Today, the guest of honor for Wealth Redefine is Mr. Sahil Shah. I think Mr. Shah doesn't require any introduction as he is managing the Edelweiss Small Cap Fund. If you study the Edelweiss Small Cap Fund or if you have been an investor into a small cap fund, I think you know about Edelweiss Small Cap Fund as well as the investment strategy of Mr. Shah. So today he has given us a time to have an interaction to give the more details about how he is managing the funds and what would be the future aspects of the fund and how the market is going to behave. So we have come up with a lot of questions which he will answer. Thank you Mr. Shah for coming and having in the Wealth Redefined show.
No, thank you. Thank you for hosting me, Soumya.
Thank you. So you have started as an analyst in Edelweiss and you become a fund manager. Now you are managing one of the best performing fund in the industry, that is Edelweiss Small Cap Fund. Can you describe your journey slightly, that how you have done it?
So I started my career in 2007 as a research analyst after doing my CFA. And I used to look at power stocks at that point of time, which was flavor in the season during 2007-8. And then I was looking at different small and mid-cap companies. I was also looking at some of the other sectors during that point of time. And I always wanted to kind of have an impact which is very, very visible. And I think that is what a buy-side firm or a mutual fund or any asset management platform will allow you to kind of have. And that is where I wanted to move to the asset management side of the business. So I got an opportunity within Edelweiss from moving from sell side to buy side, and that's how I kind of moved on the asset management side of the business.
Okay. So if you are right now managing Edelweiss Small Cap Fund, if I want to know what is your investment style or what is the investment philosophy you follow,
Sure.
Then how do you describe it, sir?
So our investment style is quite agnostic. We typically don't only invest in companies which are you would say which have very high earnings visibility and typically have a very high PE. We have both value as well as growth orientation as far as our investment style is concerned. So we are more of investment style agnostic. However, the tilt is obviously towards more of structural companies, structural bets, more towards growth companies. Typically in small and mid cap investing, capital allocation is very, very important, and our investment process, which we call it as FAIR, where F stands for forensics or capital allocation, A stands for acceptable price, R stands for robustness of the business. So those things allow us to kind of filter out companies, given that the pool of the small and mid cap universe is quite huge in terms of if you look at the number of companies, it would be around 400 to 500 odd companies in the small and mid cap universe.
Yes.
So this framework allows us to kind of filter out companies and form an investment universe from which we invest in our portfolios.
So we have seen that in 2018 onward, the small cap had a beating. After the budget came in, the taxation had come against the equity funds and all those things. So we have seen there is a beating into the small cap. But again, after COVID, we have seen there is a rally in the small cap. How do you manage the fund in those difficult times, and what was your approach at that point of time? Because this fund has mostly consistently performed.
So I think that boils down to what we don't do in our funds. In fact, we don't take any macro calls. We don't say that we can predict interest rate curve or we can predict where the interest rates are going to be, and hence we don't take such macro calls. Given that we don't take any macro calls, we don't take any cash calls in the portfolio. Also, we don't take any oversized sectoral bets in our portfolio. As I said, we are more investment style agnostic. So we are sector agnostic, we are investment style agnostic, and typically in a bad cycle, given that our approach is more inclined towards investing in companies which are better, which are capital efficient, which have good capital allocation policies, typically such companies tend to outperform in a bad market and they tend to underperform in a bull market. So I think the idea of going into businesses which are market leaders or they are growing much, or maybe they could be second or third rank in their particular given business or segments, but those businesses would be outpacing the growth in that particular sector or segment. Along with that, good capital allocation, good management, I think that allows us to kind of have a better portfolio and a more resilient portfolio during bad times.
Okay. So that was your strategy when at the bad times, and in the good times also, obviously everything goes up, so that advantage obviously plays with everyone.
Absolutely.
So when you actually launched that fund, you were the person who actually launched the fund, or it was before somebody was managing it and then you took over?
So this fund was launched when obviously I was managing something else on the asset management platform, but I took over this fund over last 2 years. In a way, when I used to run some other funds on the asset management side, I have gone through that bad cycle of 2018 and 19. So I know what kind of things work at that point of time, what things don't. And obviously when you study the history of stock markets, not necessarily you have to be there during those time frames. You get to know that companies which have better cash conversion, companies which are doing very good return on capital, so those companies typically tend to either outperform, or if they have underperformed during a bad market, they come back very strongly.
Okay. So right now if I talk about the small cap segment, the valuations are quite high. So investors are quite confused at this valuation, whether they should entry or they should book partial profit, they should book profit. What is your take as a fund manager at this point of time, at this level of valuation?
Sure. So I would say that while the valuations are slightly above the average as far as the small caps are concerned, I don't believe that we are in the euphoric zone or the frothy zone. While liquidity, the kind of liquidity that we have seen at least over last 3-4 months, coming both from FIIs as well as specifically on the small cap side within the mutual funds, I think that has made people believe that the way liquidity is coming, that is what is making people think that are we in the frothy zone. But I think valuations are somewhere in the mid of the cycle, whereas the earnings recovery has just started out.
Okay.
So when we look at capex growth story or the order book of some of the capital good companies or the car sales, two-wheeler sales, I think those all growths in different categories have started just 1.5 years back. So that makes us believe that we are in the early stage of earnings recovery with valuations which are slightly above average, more or less I would say mid of the cycle multiples.
Okay. So when I had gone through this Edelweiss Small Cap Fund, I found that you have a decent exposure in automobile sector, you have a decent exposure in private banks, and you have a decent exposure in IT also. So are you adding up to the IT at this point of time? Second thing is that today Prime Minister has said a very important thing, that pharma and automobile sectors are going to add lots of jobs in coming years. So he has given this lecture today itself. So you are already holding the automobile and IT has been bit down, so maybe a good option. What is, if you can slightly...
Sure. So in terms of our sectoral overweights and underweights, we have been underweight IT over last 1 year, given where the valuations were. Some of the mid-cap IT companies were trading at much higher multiples as compared to some of the larger IT companies. While the challenges on the discretionary spending in IT has come over last 3-4 months, the valuations were already high 1 year back, and that is where we went underweight IT. On the automobiles and healthcare front, I think on the automobile side we are overweight. As I said, that we are in the early stage of recovery as far as the automobile is concerned. Two-wheeler sales are still significantly down as compared to the 2018 peak that we have achieved. So again, there is a scope for recovery for that in that particular segment as well. Healthcare as a theme is something that we like, not only from the domestic pharma side, but also from the hospital side. Because maybe 6-7 years back, there were hardly 2 hospitals they were not that profitable. But when I look at the hospital space now, given that new listings have come about, there are many more hospitals which have got listed, which gives investors an option to invest into, and also those hospitals have become quite profitable.
Yeah.
So this is a story, I think, in the hospital. Our per capita bed or the bed per capita is much lower as compared to developed economies, and plus the quality of hospitals that listed space provides as compared to what we have in the unlisted side of the business. There is a lot of scope where we will see that patients are moving from those unorganized segment to more organized segment. And as the medical penetration also goes up,
Yes.
I think that will become more prominent.
Yes, and COVID has also accelerated the things because
Absolutely.
people are mostly moving into a better known hospitals
Absolutely.
than the local
hospitals
and local bodies and
Absolutely.
everything.
Absolutely.
Yes. So I have seen that you have maintained a decent alpha in the portfolio over the period of time. Now generating alpha for a fund manager is now getting tougher and tougher. What is the secret recipe of generating the alpha throughout the fund management? What exactly you did extra that you stay ahead of the curve?
See, I think small cap as a space, and not only us, but a lot of other small cap funds have been able to generate a good amount of alpha. And the reason is that there are a lot of stocks to select from, unlike in large caps where there are certain heavyweights, and because of benchmark considerations, a large cap fund would have to invest in those particular names. As a small cap manager, because there are no heavyweights in a small cap index, it is more actively run fund. So almost 75% of the fund is active bets in our portfolio. And I think as you take more active bets is when you can generate alpha, and as small cap as a category has generated alpha. Now that alpha varies between funds to funds obviously, and from between time periods also this alpha can vary. But I think a couple of things that have kind of helped us to kind of maintain the alpha or to have slightly more consistent performance in a otherwise very volatile space like small caps is basically, one is our approach towards investment, which is more style agnostic. We don't shy away from buying a value stock or a turnaround, though the proportion of those kind of stocks will be less in our portfolio. It will be more structural bets in nature, more growth oriented, where earnings visibility is very, very high. And I think our focus on capital allocation, because over a longer period of time, so for example, in last 3 to 6 months, while one would have thought that we have missed out on some opportunities because the way markets have kind of gone up, there would be in such cases low ROE, low cash conversion stocks, which will also do significantly well in those points of time. And as fiduciaries, it is our responsibility to kind of guard ourselves against such kind of rallies that happen in the stock market. So barring this time frame, if you look at a slightly longer period of 3 to 5 years, it is always good capital allocation, good business that works well. In fact, if you look at longer history of small caps, a lot of it has come because of re-rating and not only because of earnings growth, right? So the reason why stock re-rates is because not because of earnings growth, but also because of quality of growth.
Yeah. So one challenge for a small cap is the compliance, because maybe there are some book building exercise and all those things happens. So how do you tackle this compliance issue of small caps? Because is it that you need to meet the promoters or you need to meet the business, how it values and everything? So how do you tackle that thing?
So I think, see, in small cap, I mean, meeting the management is important. Now, you'll be surprised to know that over last 10 years, let's say before 10 years, there were hardly any small caps which used to do regular quarterly calls. Now there are more small caps or most of the small caps that would do regular quarterly calls. So the amount of disclosure has materially gone up in the small cap space. So the challenge of compliance or disclosure in small cap over a period of time has improved. And that is the reason why we are seeing that the depth of the market of small caps is significantly better now. So in fact, when we were looking at in, let's say in 2000s, the average market cap of a large cap in India was somewhere around maybe 8,000 odd crores. The same was the case for mid caps in 2010. And as we look at the average market cap of small cap in 2023, it is almost around 9,000 crores. So what used to be large cap in 2000 has now became a mid cap in 2010, has now more become like a small cap in 2023. So those things have materially changed. And obviously, as the new generation of promoters come into the business, as better SEBI regulation are imposed on the companies, and promoter by themselves choose to do more of this disclosure or quarterly calls, I think this compliance or the disclosure issues in small caps, I think have been addressed to a larger extent.
Okay. Now, sir, I would like to know about that passive investment has been again gaining the momentum for it. But we have not seen that the way small caps and the mid caps, these guys are generating the alpha. Actually, it has not gained that momentum which it gained in the large cap side, because they find it more easy to be matched rather than in a small cap. So how do you think, sir, the passive investment in India is going to come, and whether they will actually be in the small cap side? Can they actually run on the small cap side, or they will remain as a backbenchers in the small cap side?
So I obviously wish the passive investment doesn't come as an active manager, but I think on the small cap side, passive investment is difficult to I would say happen, because as we go down below the market cap curve, the capital allocation, the way you filter out stocks, the ability to select companies, that goes up. So you can't typically buy an index as you go below the market cap curve. So I think at least for next 5 years, where we have some amount of visibility, is where I don't think that in small caps especially, passive can become a very big thing.
We also not thinking that passive will become a big thing, but some of the players are making it unnecessary big, because active management will always play the crucial role in the market.
Absolutely.
Definitely. And it happened with everyone. If you look at the PMS and all kind of things, it's actually people buy it only because there is an active management.
Correct, absolutely.
Otherwise, everybody could have started a passive PMS management, which actually doesn't work.
Absolutely.
So, as a fund manager, sometimes you make strategic decisions, sometimes you make tactical decisions. So, can you exemplify some strategic decision and some tactical decisions? Or actually you only based on strategic decisions, you don't even bet on the tactical decisions because it may be uncertain on a investor perspective or a fund philosophy perspective or a compliance perspective, or you make both?
No, so we take both strategic as well as tactical decisions. For example, when I say that we went underweight IT last year, or we went underweight chemicals last year because of valuation, it was more of a tactical decision. We are not saying that chemicals as a sector has entered into a structural bear market, right? We believe in the China plus one theme that is playing out in the chemical space. India as a IT hub is going to remain on a structural basis for next almost few years or a decade. So we are not so we take these tactical decisions along with some of the strategic decisions that we take.
Okay. So in the small cap segment, which I find is that competition is too high. Investors come to the small cap for return. The only intention for them to invest into the money is to make return, because that is the main goal for them. They undervalue the risk into it and all those things. So sometimes there may be a redemption pressure coming.
Correct.
Which may, or sometimes, sir, in a small cap, immediately some companies have a bad name in the media or something. So immediately there is a redemption coming. As a fund manager, sir, how do you ensure that if there is a redemption comes in, you sell the things at a proper way? Or I mean to say that you are not buying, even the company is good, you are not buying a stock which is very liquid or something like that.
Correct.
All those things, sir, how do you manage? If you can slightly explain.
So I think liquidity, as you are trying to highlight, is one of the very, very important parameters as far as the small cap is concerned. and we keep measuring liquidity internally for the fund as such, because as you rightly mentioned that there can be some mishaps that can happen in the small cap side, and if there is liquidity which is there, then only we can kind of exit that particular stock. So if we look at the liquidity of our portfolio, almost 85% of our portfolio can be liquidated in less than 5 days.
Okay.
Right.
So that kind of liquid stocks you are already holding,
Yes.
even in a small cap
Yes.
segment,
Yes.
which gives the investor a lot of confidence to invest in your fund.
Absolutely, absolutely. So, and that is important because sometimes it happens that we have thought about a certain thing, but those things don't pan out as per our expectation. And then we should have room to sell those without having much impact on the price. So, I think that liquidity focus is very, very important.
Yes. So we also believe the liquidity focus must be there.
Correct.
And that gives investors also a lot of confidence.
Correct.
That yes, if any bad news comes in, I can redeem the portfolio or anything, and the fund manager will not have any major shift in the portfolio.
Absolutely.
Now also, let me back to your return part, that you have given a super normal returns in last 2 years in your small cap fund. Definitely we are very happy, our investors are very happy because of that. But sir, right now looking at the scenario, do you think that investors should now expecting a tame down return from the small cap, or you think this will continue?
So I think the returns that we have witnessed over last 3.5 years, at least the post-COVID rally that we have seen, is something which at least I don't expect that it will get repeated over next 2 to 3 years. So obviously investors who are entering today should tame down their expectation of returns as far as the small cap category is concerned.
So now sir, we are expecting also that there is maybe a recession. US is still now increasing the rate. They are not given any hint to slow down their rates and all those things. China is in a bad shape. So in this recession, sir, what your advice to the investors on the investment part, that as a fund manager, what you can advise to the investors that how they should diversify the portfolio?
Yeah. So I think I am believer in the India story. I believe that India is coming out of a lot of bad phase that we have seen across different segments, whether it is private capex, whether it is housing. So a lot of I would say mess that had happened or was created during 2003 to 2011. We were in a cleanup stage from 2011 to 20. So we are coming out of that, and some of the larger economies are going into that mess. At least there are first signs of them going into that. So I think allocation is something that we have to constantly focus on as an investor or as your clients. And India allocation should be the largest proportion of their portfolio, followed by one can also look at US tech or maybe a China fund. But I would say that the largest portion of the allocation should be India, and then within that one can decide on how much large, mid and small, depending on how aggressively they want to build the portfolio, as well as what is their target portfolio value.
So sir, we have seen a lot of funds actually stop taking inflows when they find the valuation is too high for them.
Correct.
We have witnessed it for DSP Small Cap Fund. They did it at some point of time. Mirai has done it at some point of time, or maybe other funds have done it. But do you have anything in mind in future that if to keep the performance which you have given the stellar performance in last 2 years in one of the champion fund in this segment, do you think that it may be a requirement in future, or you think as of now nothing is required?
So as of now, nothing on the cards. I mean, obviously, if valuations go, I would say out of whack, or it goes on the much higher side from where they are today, then obviously we would reconsider what we are thinking as of today.
Okay. So is it as a management decision or is it a fund manager decision? Mostly.
It is both. It is both.
It is a both decision.
Yes.
So today we had a discussion with Mr. Shah, who is, I told you at the starting, that one of the champion fund manager. We are wishing him all the best, that he should continue to manage the fund the way he manages in last 2 years, and I hope he will continue to satisfy our investors. Edelweiss as a group also expecting to do well, and hope all of their funds gives them the stellar performance as they have given. Thank you, Mr. Shah, for coming here, giving us this conversation. I was never expecting that out of your busy schedule you may give such kind of time to us. Thank you.
No, always.
Thank you for coming.
Thanks, Soumya. Thanks.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.